Hello guys, welcome to today's video. Right, we're going to be talking about something very interesting and SMC for scalpers. Right, I think I've talked about a video when I did a video in the past when we were talking about different kind of traders. If you want to be a scalper, if you want to be a day trader, if you want to be a swing trader or an intraday trader, a position size trader, right? We talked about that, right? So today we're going to be talking about SMC for scalpers, right? Scalpers are traders that do not have time for long-term analysis, right? But that does not mean that as a scalper you cannot apply smart money concepts effectively. Whatever kind of trader you are, either a day trader, intraday trader, or a swing trader, or a scalper, you can always apply SMC concepts, and if you follow it properly, it actually works. But most times, lots of manipulations happen because of the lower time frame confluences that may not actually follow those higher time frame ones, right? The higher time frames, they are usually stronger, but scalpers can also follow what SMC. The only thing that differentiates them is that they need to apply proper risk management, right? They need to follow risk management rule in order for them to be profitable, because they want quick trades that will play out within lower time frames. It means they will have opportunities to catch multiple trades as it goes. So they need to maintain a particular kind of rule, right? Have a proper risk management, because as a scalper you can see 5 to 6 setups in even a day. So it means you would get some correctly, you may fail to get some correctly, some will take you out, some will get. So it means what will help you now is how you manage risks, but it doesn't mean that you cannot use smaller time frame to actually take trades. They are also very wonderful. So I'll be taking you guys through and some of the. So for scalpers, majorly what they want to use, what they use as confluence, major of the time is 1 hour time frame they use for their directional bias. They also go to higher time frames to do that, but they don't need to wait for those time frames to get that confirmation. 1 hour time frame for direction, they look at the candlesticks there, formation, 15 minutes, 5 minutes, 3 minutes, 1 minute for entry. So I'll be giving you there's one I caught here today. I'm not a scalper, I'm a day trader, but sometimes I can scalp, right? If I'm bored and while waiting for high time frame, if I'm just bored, so not a serious, I not something serious, right? Just bored and just want to trade, and you saw something on lower time frames and you decide to enter. It does not affect whatever you're seeing on the high time frame, right? The direction is clean, it's clear based on what you can see on the high time frame. But you just see some internal structural moves that follows a particular SMC setup, right? And still in that direction, it's going. You can trade them. So let's just take a look at this example so you understand that. Then you can go ahead and back test and see if you can catch those kind of moves, right, on whatever time frame you of your choice, right? So you, if on the 1 hour time frame now, you see market make a low, make a high, right? This low gave back to a new high. The market moved down, tried to go up, could not. Then, right, we saw a candle, a 1 hour candle that engulfed this previous one, showing you that, oh, this low could not create a new high and price wants to go down. So if you go to 15 minutes time frame, you get to see it clearly. So what do we see here? This was that low I was talking about, right? This was the low that gave us that high I was talking about, right? So market made a pull down to the particular order block, right? So this last candle on 15 minutes now, that's where market tapped, right? So if market were to continue to go high, would have seen market create moves like this from this low, just create new high, then keep going, right? So if you look at this now, where you want to pay attention to is also liquidity. You want to look for liquidity, right? Now imagine this area when market made a low, a high, then there was an impulsive move down, right? There was a form of imbalance here that market pulled down into, right? This, so market did something like this on the 15 minutes time frame. A low, what's this? A low, a high, then a low, a high, then it made an impulsive move, create a structural move here before tapping into that POI. Then all of a sudden you see market moving slowly, taking this as liquidity, right, to tap into and break down. right? So now if you look at this, this is where it comes. You will not just take trades off a market structure shift, you will take trades after market structure shift, market has shifted and break structure, right? So if you look at this now, market came directly into this imbalance, right? Market traded directly into this imbalance right here and shifted. Now look at now this on 15 minutes, observing the imbalance on 15 minutes. You want to go to 5 minutes time frame, scalper mode. You want to go to 5 minutes time frame and look. Now this is the POI. Market was supposed to continue its move, right? Now look at that on 5 minutes time frame. This imbalance is now very, very clear. You can now see this imbalance, right? You can also look at it as a breaker, right? Mitigation block right there, sell side, right? You can look at it that way, or you can just look at it as the imbalance which we saw on the 15 minutes time frame. Now you can see as price tap. Now it will be an error to want to sell directly from the 50% level of the imbalance, of course, right? Because market has tapped into a bullish, right, order block on the 15 minutes time frame, and market is moving up, right? So to sell here is to you're selling against the trend, because we have been creating lower lows, bullish structure, right? Higher lows and higher highs, right? This is a low, this is a high. The market came down, tap into the POI. We're supposed to expect market to create what? A new high, right? So selling directly from here, aggressively from here, would be a risky move. Why? Because market can just take it out. So what you want to look at on this time frame now, you want to look at how market has been moving. So if you look at this structure on the lower time frame, which is 5 minutes, you can see it's moving in this form of trend, just like what we identified here. It's moving a trend, right? Creating those higher lows and lower higher highs, lower lows, higher lows and higher highs, right? Right? Creating that. Then what happened? Immediately market tapped into that bearish point of interest we saw on the 15 minutes time frame. On 5 minutes, we can see this shift, right? Market created that shift, right? From here now, market structure shift happened. We saw the shift. It even went down all the way to take out all the lows, right? So this is now where we got a confirmation. Market tapped into the higher time frame and broke structure to the downside, right? Now remember, we are talking about point of interest. If our point of interest is an imbalance, if we want to get entries, right? Our 15 minutes point of interest, we're using 15 minutes now and 5 minutes to catch entry. Our 15-minute point of interest was a beautiful imbalance that was resting here. We entered, we waited for market to tap into the 50% region. It tapped, then shift structure to the downside. Now we go to 5 minutes time frame. We want to catch our entries. We can also take our entries from the 50% level of this imbalance right here. This way you now want to target. So this is the POI. Market shifted. This is the confirmation entry. This is scalp mode, right? You can see what we looked at for was 1 hour for direction, was 15 minutes for point of interest, then we went down to 5 minutes for entry. So like I said, taking it off this POI, because the structure is bullish, a lot of people would buy from here for a continuation, right? Market should create a new higher high. As far as it has created a higher low, we want to see a higher high. Then there was a 15 minutes, right, imbalance here, which is also a point of interest. So if market wants to go lower, market should react from the point of interest. If not, market should just take it out immediately and continue bullish. Then when immediately market reacts from that 15 minutes point of interest, we saw a shift to the downside, right? Market broke down, took out this minute trend line it was coming with, right? So immediately went to 5 minutes time frame. You can see this is the point of interest you're looking at, mid level. That's where we call the entry. Now this shift, this is the confirmation entry. What do we still use for confirmation? Do we use the other block? No. Our point of interest for the main POI was an imbalance. We're using imbalance for confirmation entries, right? Everything is clean and clear. So all you just need to do at this point to enter at the mid level, which is here, the entry would be here, right? You can put your stop loss above the previous highs, above this high, right? and you target lower levels. You go to 15 minutes to look for lower levels, right? Where since the structure is bullish, right, market can keep going bullishly. So you know that as market tapped into this POI, it has mitigated it. So another key level, that's where you want to go. Another key level, that's where you want to look for, where market can start moving bullishly, which is this order flow here on the 15 minutes time frame, right? Because the structure is bullish, you're just catching a trade off a pullback. So it means you want to target this liquidity level here, right? So you can target all the way to here, then you close your trade, because market can, you can see immediately market mitigated this. There was a pullback, right? But we had a continuation all the way here, right? But this would have given you a beautiful trade here, right? Beautiful. You can see how fast this trade played out. This gave us a 1:5 trade. So if you're targeting 1:4 like me, you just put it here. But all the way, it went all the way for a 1:5 trade, and this played out. So this is what scalpers love. They don't need to wait for a longer time. They want to just see internal structures, and they wait for confirmation. So what kind of trade did we catch here? It's a beautiful SMC setup that looks like this. It also happens on a higher time frame, right? Market made a low, a high, a low, right? It came back down, mitigated the point of interest, but before coming down, this level sold aggressively, tapped into this POI, market went back up, right, like this, tapped into the point of interest, then shifted structure to the downside, right? We did not trade aggressively off the point of interest here. Why didn't we trade aggressively down? Because market was bullish and coming from a bullish what? Order block, right? Market was bullish, but while it was bullish, when it was selling, it created a supply zone and a sell side imbalance, right? You wanted to know if market will respect it. That's why you mark that point to see what move market would make. And market made a good move. It shifted structure immediately. What? It tapped into the POI. So you went to a lower time frame to catch a pullback and continuation entry, right? Targeting other levels of buy. Since market is not buying from this side, market may want to continue buying from a lower region. So now you know that market will sell since market has invalidated this region. So you waited for a pullback and you catch a continuation of this to the other region, so giving you a beautiful trade from this region. So first point of interest, confirmation trades. This is how you trade on lower time frames, right? Because of how price makes a lot of noise there and invalidates lots of structures, so you want to see a confirmation. So if market has shifted, you want to see, you don't just trade off any POI, right? Just like the example we saw here, we did not just trade. Even if you wanted to catch a continuation again, you can see how market created, immediately bounce off this POI, right? It did not buy aggressively, right? It made an order flow move and gave us another continuation here. So someone that did not even take trade off this region on as a scalper can take this other beautiful continuation trade and still sell below this POI, and you're out, right? Once you have seen this, you're out. So this was one of the trade I caught today. Beautiful. I was just bored and decided to go to Ethereum, and I was able to see this move, right? So you can scalp, but you should be very, very careful, because lots of noise on lower time frame that can take you out, and you must use, of course, good proper risk management and system here in order for you to catch your trade. So this is a beautiful setup. So SMC setup works for both scalpers, for both intraday traders, day traders, and swing traders. But as a scalper, always wait for that confirmation. And even if you go to 1 hour time frame, which scalpers use majorly for the analysis, you will see that before the entry, right, this 1 hour candle that mitigated a 15 minutes imbalance, right, creates a kind of bearish engulfing, right? It engulfed the previous green candle. The red engulfed the previous green candle. So we just waited for price to pull back, then we caught the sell. You can see it within the first 1 hour. So this played out in 2 hours. Scalper, right, from entry to TP, 2 hours. Immediately market tapped the entry point, right? The following hour, market aggressively hit TP. So that's how fast scalpers enjoy their trade, and it's kind of fun, right? Beautiful, like entry to TP within 2 hours. You don't need to wait for 4 to 8 or 16 hours or 1 day, 2 days like day traders and all. So that's a beautiful way to trade as a scalper. You can backtest this particular setup. I've shared it here. You can keep it, right? You can take note of this in your jotter. This particular SMC setup plays out most of the time. Sometimes it can come as a sweep like this, right? You can see it in form of a sweep, right? It means this right leg would have swept the previous leg, or it can be something like this. Any form it comes is just your observation, and most of the time the observation is how, right? One thing to observe is how price was buying, right? You can see how price bought here was very slow compared to how it sold, so it was buying. So you mark out a sell PI. You don't take the trade aggressively here because you can be taken out, but immediately you see this shift, and market also creates good imbalances there. You saw on the 5 minutes time frame, it means price wants to really go lower, and you can see how that setup played out beautifully, right? So these are some of the moves you can catch as an SMC trader for scalpers. So if you're a day trader, you can also scalp, but you can just decide. If you're a scalper and you don't have lots of time to wait, but you must always make sure that you are a scalper, not an aggressive one. Why? Because you will see multiple trades on lower time frame. So you want to, what will help you is risk management and be a confirmation trader. So thank you very much, guys. That will be all for today. I really hope you guys have learned one or two things. Save this setup. You would also see this kind of setup, SMC setup, play out on higher time frame, and it's usually very, very sweet, because once you catch this confirmation entry, it will sell or buy aggressively. It happens on buy side and also on sell side. See you guys on the next one.